Introduction. Since the start of human progress, gold has been a standout amongst the most looked-for metals on the planet. Its radiant yellow shade has charmed endless quantities of individuals all through history. In view of its strength and irregularity, it has been utilized by nations all through history as fiat cash. Fiat cash is the thing that an administration characterizes as lawful delicate or cash. The uncommonness of gold implied that its worth is not effortlessly dissolved, while its strength makes it a decent storage facility of riches. Moreover, it is said that people have bought gold as a type of protection against the instabilities of life. Countries might fall, paper cash might lose its worth, yet gold will dependably stay as something of quality. The point of this book is to demonstrate to you how you can utilize gold as a venture and, in addition, an instrument of investment. As life is loaded with vulnerabilities, being an investor, you ought to likewise expand your investment portfolio and deal with your danger level. To put it plainly, you ought not to put all your investments tied up in one place or the business sector crash. History lets everyone know a wonder such as this has happened and can happen again later on. In that capacity, your investment portfolio ought to contain an extensive variety of benefits with various exposures to various markets. The perfect portfolio ought to contain values in various business sector parts, obligations of various nations, properties of different sorts, and some fluid money. Since gold holds its worth well, most budgetary specialists prescribe a holding of 5% to 15% of your venture portfolio in gold bullions or gold-related investment to protect against value changes of your other resource classes. Whatever is left of your investment portfolio possessions are dictated by taking a gander at the current monetary circumstances of a globalized economy. The exact makeup of your gold or gold-related investments will depend on all that much on your venture goals. Much the same as different products, the fiscal estimation of gold is subjected to the laws of interest and supply. The inquiry that you have to ask yourself is whether you are putting resources into this benefits class as a financial specialist, theorist or saver. This, thus, will figure out whether you will take a transient theoretical position or a medium-term position as a financial specialist or a long-haul position as a saver. And after it's all said and done, gold has ended up being one of the most secure interests in times of financial unsteadiness. Having said that, as a judicious investor, you ought to learn as much as you can about the points of interest and hindrances of putting resources into gold and the different strategies for contributing before you submit your well-deserved cash into interests in this appealing metal. So without wasting any further time, let's move on to the very first chapter of this book and begin to learn about gold investment. Chapter 1. Introduction to Gold Investment. The very first chapter of this course is an introduction to gold investment and several basics which one surely needs to know before they make up their mind about anything. What is gold investment? Of all the valuable metals, gold is the most common type of an investment. Investors purchase gold as a method of expanding hazard, particularly using fates, contracts and subordinates. The gold business sector is liable to theory and unpredictability, as are different markets. Gold is appeared to have the best place of refuge and supporting properties of various nations out of every single valuable metal accessible for investment. A good delivery bar, the standard for exchanging the significant global gold markets. Of all the valuable metals, gold is the most prominent as an investment. Why invest in gold? Holding esteem. A huge motivation behind why individuals put resources into gold is that it has performed outstandingly in holding its quality over the long haul, in contrast with different resources such as paper money, a few coins or even stocks, which can lose their whole value if the organization becomes bankrupt. Expansion fence. The conventional perspective, which is bolstered by recorded confirmation, is that gold offers a magnificent support against expansion, and if you somehow happen to take a gander at the years where growth was at its most elevated subsequent to the Second World War, you would see that gold beat the Dow Jones by some edge on every event. This part of gold costs has a tendency to urge investors to surmise that the main time to put resources into gold is when inflation is on the ascent, or in times of money-related instability, or when the political atmosphere is unstable. You can discover insights to bolster the hypothesis that gold costs regularly rise when trust in governments is low, and it is once in a while alluded to as the emergency item, because of the way that investors tend to look for the support of gold in times of pressure on the planet. Supply and request. Generation of new gold from mines has in fact been drop off since we have stepped in another millennium, and an expansive rate of the supply of gold brought into the business sector since the 1990s has really originated from gold bullion sold from the vaults of national banks. There has been a slight recovery ongoing as of late, however, as it takes any place between 5 to 10 years to bring another mine into full generation, so we are yet to see the effect of this in the business sector. The general precept is that a diminishment in the supply of gold will fuel an expansion in gold costs in light of straightforward supply and request standards. Development popular. An expansion in the abundance of rising economies and a consequent ascent in the purported working classes have absolutely supported the interest for gold. It ought to additionally be recalled that gold is very much instilled in the way of life of some nations, and India is the best sample of that, being one of the biggest gold-devouring nations on the planet. China merits unique say as well, as gold bars are a customary type of sparing. The development in the abundance of the buyer in China will fuel development popular for gold for a long time to come. Investors are likewise showing a hankering for gold, as a greater amount of people apparently take the perspective that aware, for example, gold must be seen as venture class deserving of thought and need to make it a player in the allotment of assets. Proof of this enthusiasm for gold can be seen by discovering that one of the biggest ETFs in the United States joined the positions of the major holders of gold bullion only 4 years after it was dispatched. Some portion of your venture portfolio. Not everybody prefers the case for gold, and Warren Buffett is somewhat celebrated disliking gold as a venture, but rather numerous otherwise investors consider it to be a crucial part of a broadened venture portfolio. You can consider the benefits of putting resources into physical gold, for example, purchasing bullion or coins, or theorizing utilizing ETFs, amongst different methods, for picking up an introduction to this well-known valuable metal. It has to be noticed that in spite of the fact that the cost of gold can exhibit instability in the short term, history has so far demonstrated that it is more than ready to keep up its worth over a more extended period. It likewise does regularly give a decent fence against inflation and the potential disintegration in the estimation of real monetary forms, so it is a venture that needs thought. Godliness for investing in gold. In the past several years, gold coins have acknowledged hugely to the degree that they have turned out to be greatly expensive. Before purchasing any gold coins, there are a few that you ought to pay special mind to. With the web readily available, you are no more confined to the nearby merchant, yet rather have the whole collection of merchants who are recorded on the web. Despite the fact that you may show the signs of improvement deals, there are likewise a few extra calculations to take thought to when obtaining on the web. In the case that you are considering purchasing from eBay, dependably check the criticism of the vendor. Negative criticism ought to raise some notice ringers. Regardless of the fact that the input is all positive, examine deliberately, as a few dealers might be offering low esteem things just to develop their notoriety before proceeding onward to high esteem things. For high esteem things, check if the dealer is willing to utilize escrow.com. With escrow, your assets are not discharged to the dealer until you are fulfilled by the thing. In spite of the fact that there may be a charge included in utilizing escrow benefits, the genuine feelings of serenity is definitely justified, even despite the expense payable, particularly with regards to expensive holes of cash. Guarantee that the dealer practices an arrival arrangement which takes into account a discount in the event that you are unsatisfied with your buy. This is critical, particularly in the event that you are buying a non-insured coin. It doesn't make a difference if the vendor is a logged off or online dealer. You will need to have the alternative of giving back the thing and a discount when your reviewing administration gives you a lower evaluation than what the dealer promoted. Continuous attempt to purchase the rarest coin that is in mint condition which you can manage. The costs of collectible gold currencies are likewise subjected to the laws of interest and supply. Large portions of these collectible currencies offer at nearly the cost of the metal itself, as there are more than adequate supply to cover interest. For instance, the South African Krugerrand is offering for around 5% over the cost of gold. However, higher evaluation coins are less available for use, and along these lines, the interest for them will separate a premium all that much higher than the present cost of gold. Like the values markets, it is hard to detect whether you have attained the top or low of the coin market. Along these lines, be reliable in your venture. Over a time frame, you can normal out the expenditure of your ventures instead of one single amount in a solitary example. Done with the basics. Let's see in the next chapter if gold investment is worthy of your time or not. Chapter 2. Advantages and disadvantages of investing in gold. This chapter highlights the pros and cons of gold investment. Give it a read. Advantages. First, verifiably, gold has held its quality well, even in times when the estimation of the dollar has fallen. Because of this very reason, it is a decent cushion for your reserve funds against the peril of inflation. Second, the supply of gold is constrained. It can't be made and must be removed from the beginning. In light of this lack, gold can hold its quality. Paper cash, then again, is the making of the central bank. Uncontrolled printing of paper cash can for all intents and purposes leave it useless. Third, the estimation of gold has been on the uptrend. Since 2001 alone, its worth has quadrupled. Fourth, as the economies of the two most crowded countries, China and India, turn out to be richer, the interest for gold will keep on expanding. This, thus, will drive the estimation of gold to rise much further. Fifth, nearly gold-related ventures tend to perform vastly improved than stocks or bonds amongst times of political or economic flimsiness. A striking case is among the late global money-related emergency. While costs of stocks and bonds fell drastically in the midst of those uncontrolled times, the cost of gold, despite what might be expected, has risen generously. Sixth, it is a demonstrated store of quality and notwithstanding amongst times of wars. Its irregularity, strength, versatility as a storage facility of worth, and widespread acknowledgement makes it an appealing different option for cash. Seventh, these days, its allure lies in the way that gold can enhance one's investment portfolio and shield the estimation of one's riches. Eighth, there are few ways which one can put resources into gold. One can pick to put resources into genuine physical gold as bullions, Krugerrands, uncommon or old coins in virtual gold like e-gold, gold prospects, paper gold, and spread wagering. Disadvantages. First, all through history, the estimation of gold has appeared to be flimsy. In spite of the fact that its quality has been expanding of late, it declined by 70% amongst the 1980s and 1990s. Second, while the estimation of values and land may be expanding, the estimation of gold may be declining then again. This is because of the way that financial specialists will switch their investments towards different markets instead of interest in gold. Third, since June 2008, the estimation of gold has come to over $980 per ounce, an untouched high. Although such pick-up can be seen to be an ideal pattern, it can likewise imply that the gold's business sector is oversaturated and is expected for a business sector remedy at any point in the near future. Fourth, when contrasted with different valuable metals, gold has a low mechanical interest. Its interest and esteem is in this manner chosen to a great extent by financial specialists and is relatively less steady. Fifth, regardless of the fact that in the short run, gold is an astounding storage facility of riches, as a long-haul venture, gold is the not perfect investment. This is on account of its arrival is efficiently outpaced by the values market. The Wall Street Journal has demonstrated that $1 of interest in gold in 1969 returned $20 in 2006, though the same interest in the values market, as indicated by the S&P 500 record, would have created an arrival twice that sum. Sixth, interests in gold have no payout regarding profits. Despite what might be expected, stocks have profits paid routinely by the organization whose stocks the financial specialists hold. Profits are a part of an organization's benefit paid out to its shareholders. Seventh, the estimation of gold has been outpaced by expansion. Except for the most recent 3 years, the estimation of gold has been on the decay in the wake of achieving a high in 1980. The interest and supply of gold have expansive business sector dissimilarity. This is because of the way that most national banks have a huge stockpile of gold bullions adding up to a large number of tons. The World Gold Council in 2003 reported that there are 33,000 metric huge amounts of gold kept in the vaults of national banks. This sum represented right around 25% of all gold which had been mined by humanity. Moreover, in the meantime, in 2003, the generation and supply of gold to the business sector was just 3,200 metric tons. Scientifically talking, this would imply that the gold in vaults of the national banks alone can supply the gold business sector for 10 years with no mining by any means. With that sort of difference, national banks can undoubtedly misshape and discourage the costs in the gold business sector on the off chance that they discharge their stockpiles beyond all detectable inhibitions market. Gold common assets, except for the most recent 3 years, have likewise performed ineffectively when contrasted with shared assets that put resources into nomining related values. All things considered, an ideal approach to share in the investments of the valuable metal business sector is by acquiring the genuine metal itself, whether as bullions or coins. To gain more information regarding this topic, keep reading Chapter 3. 5 Best Ways to Make Gold Investment. An ultimate dollar support supposition will dependably be gold. Investing in gold through responsibility for the metal itself, common finances or gold mining stock gives the most direct counter to the dollar. As the dollar falls, gold will inevitably rise. In a minute gives you numerous approaches to position your portfolio in order to benefit from a positively trending market in gold. Until further notice, one can emphasize the high likelihood of gold's future. The genuine potential for profits in the coming years and decades is not going to be discovered in the customary American blue chip industry. That is an economic dinosaur that can no more contend on the planet market. The future development will be found in gold. The world economy might remain off the best quality level. In any case, the substantial estimation of gold as the basis for genuine wealth, whether recognized by national banks or not, will never show signs of change. Truly, this has dependably been the case, and it generally will be. As such, we are on a best quality level despite the prominence of fiat. You have plentiful options. In the following sections, you'll find 5 approaches to putting resources into gold. In light of your level of business sector experience and commonality with items, one of these will be appropriate for you. Direct ownership. There is in no way such as gold bullion a definitive articulation of perfect quality. Generally, numerous human advancements have perceived the changelessness of gold's worth. For instance, Egyptian human advancements covered endless measures of gold with expired pharaohs in the conviction that they would have the capacity to utilize it in existence in the wake of death. Extraordinary wars were battled among diverse motives to pillage stores of gold. Why the appeal? The answer: gold is the main genuine cash, and its value can't be altered or forced by government fiat, the fundamental purpose behind governments to go off the best quality level, unfortunately. Gold's worth will rise taking into account the unmodified strengths of supply and request, regardless of what Mr. Greenspan orders in regards to financing costs of greenbacks available for use. The huge drawback to owning gold is that it tends to exchange with an across-the-board in the middle of the offer and ask costs. So don't hope to turn a quick benefit. You'll purchase at retail and offer at wholesale, so you'll require a major value hop just to earn back the original investment. Be that as it may, you ought not to see gold as a theoretical resource, but rather a protective resource for holding esteem. Since your dollars are going to fall in worth, gold is the best place to safeguard esteem. The best structures for gold proprietorship are through stamped coins, South African Krugerrands, Canadian maple leaves, or American eagles. Gold exchange-traded funds. The late blast in exchange-traded funds, ETFs, displays a considerable yet more intriguing approach to putting resources into gold. An ETF is a kind of shared asset that exchanges on a stock trade like a normal stock. The ETF's precise portfolio is altered ahead of time and does not change. Hence, the 2 gold ETFs that exchange the United States both hold gold bullion as their unparalleled resource. Gold mutual funds. For individuals who should reluctantly put resources into physical gold, yet at the same time seek some presentation to the valuable metal, gold common assets give a supportive option. These assets hold an arrangement of gold stocks, that is, the supplies of organizations such as Newmont Mining that mine for gold. Newmont is a sample of a senior gold stock. A senior is an extensive, very much promoted organization that has been around quite a long while and has a gainful reputation. They watch out for own built-up mines that deliver known amounts of gold every year. For some financial specialists, determination of such an organization is a more direct or preservationist play versus grabbing modest shares in genuinely youthful organizations. Junior gold stocks. This level of stock is more theoretical. Junior stocks are more averse to claim beneficial mines and might be investigation plays with higher potential benefits additionally with more serious danger of misfortune. Capitalization is liable to be lesser than the capitalization of the senior gold stocks. This scope of ventures is for investors whose risk resilience is more extensive and who acknowledge the likelihood of gold-based misfortunes in return for the potential for triple-digit pickups. Gold options and futures. For the more modern and experienced investors, choices permit you to theorize in gold costs. Be that as it may, in the choices market, you can theorize on value developments in either bearing. On the off chance that you purchase a core, your trusting costs will rise. A call fixes the price tag, so the higher that cost goes, the more noteworthy the edge between your altered choice cost and current business sector cost. When you purchase a put, you anticipate that the cost will fall. Purchasing alternatives is dangerous, and a bigger number of individuals lose than win. Actually, around 3/4 of all choices purchased lapse useless. This choice's business sector is mind-boggling and requires experience and comprehension. To sum up, choices have two key qualities, one awful and one great. The great quality is that they empower a financial specialist to control a huge investment with a little and restricted measure of cash. The awful quality is that alternatives lapse inside of a settled time frame. Along these lines, for the purchaser, time is the adversary in light of the fact that as the lapse date gets closer, an alternative's chance worth vanishes. Anybody putting resources into choices needs to see the majority of the dangers before they burn through cash. The prospects business sector is very mind-boggling for most, by far, of financial specialists. Indeed, even experienced alternatives investors perceive the high-hazard nature of the fates market. Considering the scope of approaches to get into the gold business sector, prospects exchanging is the most mind-boggling, and while huge fortunes could be made, they can likewise be lost in a moment. One can't know, foresee or even figure when the demise of the dollar is going to happen or how rapidly it will occur. In any case, you do know it will happen. The unfortunate fumble of money-related approach by the Fed over numerous years has made this unavoidable. Any investor who sees the financial circumstance comprehensively, both locally and universally, can see that inconvenience lies ahead. The Chinese are building their own obligation on the questionable establishment of the US dollar, and other Asian economies have been compelled to come for the ride. At the point when the dollar falls, numerous different nations will endure also. The counterbalance, intelligently, is found in wares. Putting resources into oil stocks bodes well, for instance, in light of the fact that the cost of oil is rising, and as it turns out to be harder to bore oil, those organizations that claim to penetrate and investigation operations will advantage. It bodes well to put resources into different products too. The unmistakable resource play is obviously where future worth is going to lie. With China's endless requirement for coal, iron metal, tungsten, copper, oil and different metals, the fate of unmistakable markets is the splendid spot in the melancholy monetarily based financial matters of the world. Driving the charge is gold. It is humorous that money-related strategy takes after an anticipated example. Governments overprint cash and their coin crashes. Unavoidably, they generally come back to gold, however, frequently at incredible cost and with significant enduring. People end up in another of those minutes in time where the unreliable financial agreement has put many at danger. Be that as it may, one don't need to just hang on and sit tight for the downfall of the dollar. You can make a move now, since that destruction is incredible for your portfolio, in the event that you position yourself in substantial resources as opposed to in unfilled fiat guarantees and the peculiar financial reason of US money-related approach. Products and administrations can be paid for just with merchandise and administrations. Money is only an IOU, a promissory note that does not go down with any unmistakable worth. When you achieve our national credit limit, the fiscal approach will be compelled to withdraw. At the point when that happens, conventional investors and their investment accounts will be hit hard. The recipient of the falling dollar will be the financial specialist whose possessions underline unmistakable estimation of merchandise, assets and valuable metals. Each risk for one particular group brings out opportunities for another group. Everything relies upon where you position yourself. Those financial specialists situated in dollar-based investments are going to endure the loss of buying force when the dollar's quality vanishes. The individuals who have moved their investments to higher ground will profit by the change. Chapter 4. More about gold investment. How to buy gold. On the off chance that you are occupied with purchasing gold as a feature of your venture technique, there are various approaches to secure a physical holding or pickup presentation to the valuable metal through an asset or exchanging stage. Gold bullion. In the event that you need gold that offers a blend of inborn and possibly rising venture esteem, your essential thought ought to be to consider gold bars or coins. Gold bars come in metric sizes and are accessible to buy at the overarching gold cost for that day, in addition to a premium to cover assembling and showcasing. The critical thing to recall is that the smaller the bar you purchase, the higher the premium you will presumably need to pay. A 1-gram bar could have more than a 40% premium appended to it for the retailer, though a 1-kilogram bar will clearly cost you significantly more to procure. However, the impression up is most likely more prone to be in the area of 5%. Coins. Gold coins are prominent with purchasers, and 22-carat sovereigns appreciate continuing prominence, particularly amongst British financial specialists. The estimation of these coins changes as per their inherent quality and also when they were stamped, having an impact on their cost and esteem. Present-day coins, dated from 2000 onwards, will cost more than their prompt esteem. However, sovereigns that were made in the late Victorian period can offer the potential for more prominent increases because of their irregularity, yet this implies they will likewise be more costly to obtain. Trade exchanged assets. It could be contended that gold ETFs are not, in fact, reserves because of the way that they take after a solitary security. The motivation behind an ETF is to track the gold cost through the stock trade, and you can conjecture whether the cost is going to rise or fall and benefit or lose as per how right your sentiment was in a particular time frame. ETFs are managed monetary items, and you can hope to pay a managing commission on every exchange that is most likely around 0.4%. Unit trusts and venture trusts. There are particular unit trusts and investment trusts recorded on the share trading system, which put resources into the shares of gold mining organizations and different items. Putting resources into one of these trusts can furnish you with a presentation to gold without the need to really purchase any of the valuable metal itself. You will find that these pro-supports can be entirely unpredictable, and gold mining values can regularly be more unstable than the gold cost. Yet persistent financial specialists may be remunerated with a blend of tolerance and great timing. Gold shares. You may conclude that you would like to put specifically in a freely cited organization and purchase shares of organizations that exchange or mine gold. The offer cost of individual organizations is no less unstable than putting resources into a unit or venture trust, and you can expect a lot of deductible vacillations in the estimation of these organizations. Yet they could, in any case, be a sensible portfolio diversifier on the off chance that you have the right risk outlook to undergo the instability. It is not hard for a really honest-to-goodness and broad-scale monetary expert to struggle with the route. Obtaining gold bars is an amazingly fundamental and successful methodology for getting the direct presentation to the profitable metal. Economies of scale every now and again suggest that the greater bars are commonly open at the most diminished premium to their absolute inherent worth. Humbler quality gold bars, all things considered, cost more per ounce altogether for the trader to keep up a general income and to speak to era costs. Acquiring a kilo bar of gold may work out less costly than obtaining humbler bars anyway. Many times you will find that your choice of buyer is limited in light of the size and estimation of the gold you have in one bar, which implies you may well end up offering to a shipper who deals in more unmistakable sums than a private buyer. There are different central indicates and favourable circumstances acquiring gold bars. The principal great position it offers is that gold bars are tolerably easy to trade, so you should constantly have the ability to find buyers and merchants in the business segment, which is not the circumstance with respect to some gold coins. Another key offering point is that the premium you pay when purchasing gold bars is regularly lower than you would pay when getting coins. In the event that you are ready to arrange the best give, it is frequently conceivable to procure a gold bar at near the spot cost of gold with a little premium included. The other motivation behind why gold bullion is so mainstream with various investors is that you are holding physical gold, so it gives a level of relief that you are holding something of quality, that remaining part's yours, whatever happens to the economy and securities exchanges, in spite of the fact that its worth will rise and fall in light of the compelling variables. Gold coins. There are a large number of gold mint pieces being purchased and sold all the time, and they are moderately simple to secure with various merchants and outlets offering diverse sorts of gold currency to investors and authorities. Gold coins ought to have an abnormal state of gold virtue, and certain coins like the American eagle and the Canadian maple leaf are well known with purchasers. There has been a shift far from coins towards putting resources into gold through ETFs. Yet there are signs more as of late that feeling might well be coming back to exchanging coins like the maple leaf, which is alluring to financial specialists as it tips the scales at a reasonable 24-carat gold. There are absolutely disservices to contributing gold coins, and one viewpoint that is off-putting to investors is the way that costs have been seen to fluctuate decently at specific times, so timing can be basic to when you make a buy. It ought to be noticed that gold coins as an investment ought to be held for at least 3 years, keeping in mind the end goal to see any potential upside in their worth, and purchasing coins ought not hence be seen as a transient methodology. You likewise should be cautious with regards to purchasing coins and mastermind to keep them yourself instead of concurring for somebody to store them for your benefit. In spite of the fact that there are numerous legitimate merchants who won't offer you gold coins that don't exist, there are a few tricks around that consent to hold what end up being non-existent coins for your sake and take your cash, so dependably take physical ownership of your coins in the primary occurrence. Coins versus bullion. There are advantages and disadvantages to purchasing coins, and the same remarks apply to purchasing bullion, particularly on the off chance that you are taking a gander at purchasing bigger amounts. There are sure circumstances where a few coins may offer superior resale esteem contrasted with bullion, and despite the fact that a bigger rate of investors would most likely descend for purchasing bullion over coins, you ought to additionally consider that more seasoned sorts of coins can regularly be sold at a premium. Everything relies upon what your own inclination is with respect to gathering and holding gold, yet from a cost point of view, bigger gold bars are frequently the most cost-effective method for procuring physical gold. Certain mint pieces can end up being a superior venture than bars, and there is additionally the way that more merchants, gem dealers and individual authorities worldwide will need to purchase coins than there are bullion merchants, so it is possibly giving you more alternatives for offering. Both gold coins and bullion frequently pull in a premium when you are purchasing them, so you have to consider this your aggregates when you are choosing whether to purchase coins or gold bars. With this comes the course to an end. Read out the last segment to get a quick review of it. Conclusion. To numerous, gold speaks to numerous things. It has assumed several parts in the lives of individuals and additionally countries. It had conveyed wealth and popularity to a few, and in the meantime the desire for it has been the death of numerous too. Countries have likewise gone to war as a result of this metal. Be that as it may, a standout amongst the most prominent parts of which gold is associated with is its part as money-related standard in the economies of the 19th and 20th century. That part today has been surpassed by the US dollar. Thus, with current mechanical interest at 10% of total interest when gold was a money-related standard, gold does not appear to be an appealing investment choice. Given this situation, it is reasonable that financial specialists will be at a misfortune at how to respect gold as far as an investment vehicle. The best approach that a financial specialist can bring, as for gold, is to view it as only merchandise, like some other thing with regards to contributing. As a type of shield against a worldwide monetary emergency, gold is a decent protection. However, one ought to shoulder personality a primary concern that if such a situation were to truly happen, such type of protection will exist for the individuals who hold gold physically. All things considered toward the day's end, regardless, you have to inspect your investment goals before you can hold on to gold as the perfect type of venture.